The International Monetary Fund just released their Global Financial Stability Report, or Instability Report in this case. I mean, they're saying that right now there's more risk, or as much risk as we had during COVID-19 and during the global financial crisis. We're approaching those levels. I mean, do you agree with that? Or what are they pointing to?
Yeah, a part of it is that we have liquidity that's drying up. And the incentives have changed, and this has been a gradual process. One of the guys that we talked to years ago on our weekly commentary, who helped design the legislation, Dodd-Frank, he said, I probably screwed things up.
Wow.
I tried to fix things, but probably created the next crisis in what we just put together, which was an amazing bit of candor on his part. But the issue was you change incentives for people who usually make a market in an asset. In other words, they're the ones who will like warehouse stocks or bonds, if you want to imagine that. You want to sell, and I don't have a buyer lined up yet. Well, I'll go ahead and take it into inventory and then make sure that it gets sold to someone else in the future. But that inventorying process, that warehousing process, what they call being a market maker, it's been discouraged. It's been discouraged by a changing of an incentive structure within the marketplace. So stocks, less market-making activity. Bonds, less market-making activity. And what that means is that when people go to sell, there's lower natural limits for the existing market makers. And all of a sudden, if there's too many people who want to sell, maybe there's not actually a buyer. And that's where you begin to look at financial stability. Well, what happens if you can't find a buyer? Now, all of a sudden, prices begin to cascade. And as prices cascade lower, now you're talking about compromising the stability of individual financial firms. This is a lot of what happened in the global financial crisis. We couldn't find a price for a particular asset, but those companies needed to raise money. Nobody would give them money, and they went from having a liquidity crisis to having a solvency crisis overnight. Need a little bit of money, now we're broke. That kind of dynamic is in play. The IMF is in tune with it, and it's happening not just as it did in the global financial crisis for mortgage-backed securities, but it's happening with a much broader range of assets, which I think is very, very important.